Another episode of Chart the Markets, courtesy of our good friends at FEG Token, smartdefi.com, and of course BYDFi Exchange, where I encourage you to sign up with the link that is in our X post and on my YouTube page at Blunthouse TA in the description. And you can sign up there with that link and be eligible for trading bonuses every time we go live. So I encourage you to do that. And without any further ado, let's get right to the charts, because for the first time in a little while, we're starting to see some red on our screen. And what we're looking at here is our daily Bitcoin chart. Pretty simple right now. We've just got a volume profile up, the 8 EMA and 5 EMA that is working under our script. And on the daily, it's kind of showing us our very first sell signal in a very long time, since June, mid-June, about a month. So, nothing goes straight up forever. Right now, we always worry about, oh no, what happens when we start to pull back? Where do we go? What does it mean? And everybody starts to freak out. Well, let's just calm down for a second, all right? And let's just look at our daily chart. The two yellow horizontal lines that you see have been here for quite some time. This one we drew on our 4-hour way back here in May. And we left it here because we said, hey, you know what? Because we know current price revisits past, and price will kind of move in waves and levels, let's leave this here so that we can come back and see if this level has any meaning later on. Same with this one here. That 116.3 we put, I think, last week. So what do we expect? Well, we're going to use our volume profile because it's really important when you're pulling back, and especially when you're pulling back from highs. Anytime you feel or would be concerned that the pullback you might be seeing could be intense, use the volume profile. The volume profile is going to tell you where the trading has and has not been. Because when you're approaching an area where it has not been, and that is what you see to your right here, just as an example, you'll see this kind of indent or gap. That gap is where it hasn't been. And it was created by these kind of big parabolic candles. Now, they're great when you're on the right side of them, when you're trading long, but just remember one thing, they're filled with fairy dust and air. And they do a terrible job of holding price up on pullbacks. That's why you'll see price rip up and down into these gaps. So we know this upper level here at 116.320, I think we have it at, is an area of some support. We've seen that in the past. So if we break that and we get into this gap, knowing that current price revisits past, and here's a whole bunch of it represented by this simple line here, which is now support and resistance. If we get into this gap, it only makes logical sense that we use this as a level. Price will be attracted to this. Right? Again, doesn't mean it's the end of the world. But if you're trading short, where do you trade to? Right? So all we do is throw up your 20. Start one, okay? Throw up your 20. And we learn a little bit on this candle, don't we? We're breaking the 20. We like using it as support, right? We like using it as support, but now we're finally breaking it. And really, this is the first real solid break since back here where there was a bit of a wick, but you closed well above it. So what do we know? We know that when we break one level, we look for the next. And on this particular daily chart, we're actually getting our sell signal as well. So what are we going to do? Well, we're going to look for our next level. Where is it? There's the 50. And where does it happen to be? Well, kind of hanging around that level that we've established as point support and resistance before. Right? This is just peeling back the onion. Right? One little bit at a time. So we know that when we're trading above the 20, the 50, and the 200, it only makes sense, and this is a really nice example, right? Trading well above the 20, well above the 50, and well above the 200. But at some point in time, you do come back to check them. And it's not a disaster when that happens. It's just price movement. It's supposed to happen like that. But keep in mind, when price goes up in a massive way, it can retrace in a massive way. And that's why these retraces will feel like a lot. It's just because price went up a lot. So we're attracted to this level as support and resistance. We've broken the 20. So if this candle closes below the 20, that's further confirmation that you might look for the 50. But that's not all in one candle. It's a process, right, of ebbs and flows. But ultimately, you're looking for that gap, right? That gap doesn't hold price up on the way down. You fail it, you're coming back to the point of control. That's the upper value range. And you want to hold that because all of this is gravy. This is a premium up here. This light trading is indicated by these gray bars. This is where all the dense trading is. Right? Price is attracted to past, and the more past price there is, the more current price will be attracted to it. The problem is when you get to the shelf, because that's what this is, you fall into a giant gap. And then, of course, what do? We start looking for other levels. And because everything is fractal, we can use these levels on all time frames. And that helps us get confirmation and validation of where we think price may be going. And we simply reapply the rules that we use on a daily basis. So, you're hoping that when you hit the 20, you get support. But this isn't the first test. This was. So as soon as you move on from the first test, the probability or the chances of it failing go up a little bit. In this case, it looks like it wants to break it. Well, here we are. What are we looking for? Past price, and so on, and so on, and so on. If we go back to our 4-hour, that's how we actually saw this unfolding a little beat ahead. You can see here, this is our upper value range. Price was kind of range bound between the support and resistance level that we had drawn previously and the point of control. And you have no idea what comes after each and every candle. But when you see all these major moving averages twisting together and starting to arc over, and then a big red candle shows up with an arrow above it as a sell signal, get out or go short. Doesn't matter what the time frame is. Everything is fractal. So you break all these levels that have kind of come together and twisted. And we talk about this all the time. That's consolidation, right? We don't want to trade this stuff if we can help it. The stuff we like are the big long runs. The ones where you can put your feet on the desk and clearly see that you're in a bull trend or a bear trend if you're short. The other thing you cannot do is pray and hope your way when you're on the wrong side of it. So, and this is a good example. So a couple people have reached out. It's like, I get on the wrong side of the trade. I don't cut it early enough. And then I'm like gambling. I think, well, I've already lost this much. I might as well hang on and see where we go from here. The idea is not to get there. And when we talk about having your trading become instinctive, this is probably one of the most important areas where you should become instinctive. If it's not, if you're on the wrong side of it, get out. And the quicker that happens, the better. Don't be ticked that you paid a fee. Who cares? That's a small price to pay for the loss that you potentially could take. Right? So when you feel like, for whatever reason, you're caught up in this chop, been monitoring it for days or even weeks, and you're starting to form a bias, right? That's what happens. You can form a bias real quick, right? If you're long in this chart, let's just back this up for a second. It's normal to get conflicting signals from time to time, especially when you're coming out of the chop. So don't worry about that. There's not a lot we can do to remove them. We filter them, but we can't completely remove them. But when you see a red candle show up with a sell signal, just get out. Don't waste your time. waiting to see if price is going to snap back. You don't have that kind of time if you're trading with a little bit of juice. Right? The stops on these are real easy to see if you were if you are short. The tops of these two candles here, that's your stop level. Right? If price was to reverse. But if you're long, you got to get out here. And don't wait to do it. Like if this is a 5-minute chart, you don't have the time to mess around. Because what you're going to be seeing is, oh my gosh, there's so many places that price may want to go. Right? I'm breaking the point of control. I'm attracted to another level of support and resistance. I'm trading above the 200 and I may be drawn to that. And switch your time frames back and forth so you don't get hit by something you didn't see coming. Especially when you're breaking out of consolidation like this. Because we know that's when we're going to get those big volatile moves. Right? And the best way to see those is through different time frames. And I'd like to just quickly show you, you should be looking at 3 different views right here. And these are 3 views of Bitcoin. And if you can't see this chart, just say so. But there's a 15-minute, a 1-hour, and a 4-hour of Bitcoin. This is a trend spider chart, but it gives me the ability to show you this on different time frames. So I use this quite frequently because we're trading by levels. So here's our 15-minute, and you can see this chart is completely capitulated. But on its way down, what are we doing? Well, we can see up here how price starts to roll over. We have the 5 crosses down through the T line and all that other kind of stuff, and price starts trading on the south side of the 5 EMA. And as it breaks one level, it literally splits everything. Right? So breaking major moving averages is breaking past price history. Think of it like that. And when you break a whole bunch of stuff all at once, it's usually not a good thing. And price just rolls over. And we're looking for levels as targets. Right? We don't care that there's a wick here, but if we were short to there, for example, you'd be good. And what does that look like? So this is a 15-minute. What does it look like on the 1 hour? A little cleaner, because why? Because you see the 50-day moving average on the 1 hour chart there. Right? And you're failing it. Price starts to roll over. Boom, break one level, find the next. Break one level, find the next. Break one level, find the next. Now, how you want to trade that is really going to be up to you. But make no mistake about it. There's an easy way to determine when you're in a downtrend where price may want to go. And when it reverses, the same applies. If we look at this 15-minute chart, when it does reverse, and look, we're still in a confirmed downtrend on this time frame, but let's just make some assumptions. And price starts to move higher. What are we looking for? We're looking for enough momentum in price to pull that short-term indicator up through the T line, helping us change the trend, change direction. And once we've done that, what will we be looking for? We're going to be looking for, this is the lower value range on the volume profile on the 15-minute. That would be target 1. Target 2 would be your next major moving average. Target 3 would probably be somewhere up in here, and so on and so on. And that allows you to construct a trade methodology. And you're validating everything with another time frame. And it is easier when you see these things quite often on one screen. I get that. But what's the concern if you're watching the 1 hour chart? So you had this big move down on the 15-minute. We've hypothetically talked about what a reversal would look like. But our problem here is we have to break this major moving average. which is the 500 on this time frame, which is the 1 hour. Now, if it looks like it's stalling on the 15-minute, which is showing us here that we literally wicked the lower value range and that moving average and fell back, we see on the right-hand side of our chart on the 1 hour, the volume profile, that there isn't much here, is there? After where we are now. And that creates a little more reason to be concerned that price may fall. The short-term chart isn't showing you the signs of reversals that we talked about. The 1 hour is showing you that it's struggling with a resistance level. And if we boot over to the right onto the 4 hour, we can see quite clearly, there's our point of control, that thin pink line, lower value range, upper value range. We can see underneath here, this is a gap. Right? Anything above and below the point of control is gap. And it gets real light and then gets actually even lighter. Right? That is how we watch to see where price may want to go. Level by level by level. The 15-minute chart that you're seeing on your left-hand side, all of a sudden that candle is a giant red candle. Price, and how many people, as we were watching this, tried to long this candle thinking this was the breakout candle. That's my V bottom, and now I'm going to go and make a new high. Tons. Thousands, millions maybe. Right? They're all out there doing it. Fact of the matter is, you're still in a downtrend. This is why you don't cheat. Right? This is why I don't cheat my own system. Most of the time. Okay, so it's telling us, based on history that's been proven and back-tested, that this stuff works. You just have to connect all the little pieces, which isn't hard to do. When you've got these 3 time frames on your screen, it makes those nesting dolls that we talk about, where you look inside one to see another, it makes that quite clear. This big red candle that's failing to reverse here is what you're seeing on this 1 hour failing a major moving average and the lower value range, while price falls into very light trading. And then all of this on your 4 hour gives you cause for concern. This level, which is the 1000 MA, is 11.9, and that's 113.9. So where's 11.9? Somewhere in here. That is the 1000 MA on the 1 hour, right in this area in here on the 4. So you can kind of anticipate what price might be looking for. One level at a time. And we will just continue to let price tell us what it wants to do. We can't front run the chart. When you see 3 screens up like this, it should really tell you in real time why we don't want to front run the chart. Like, you might think, oh, I'm going to cheat down here and get a little bit of a run at this to the long side, without understanding what you're up against on other time frames. And that's how people get in trouble. Laser focused on a single time frame without understanding what's going on the others is not a habit that I would want you to make. Use these time frames. They're there for you, because everything is fractal. What you see on one will happen on another. The same phenomenon is going to take place. Let's look at this 4 hour chart for 1 second. What happened here? Failed breakout, rolls over, takes out the previous wave's low. There it is on the 1 hour. There it is on the 4 hour, and obviously it happened way back here on the 15-minute. This was literally a breakdown in real time that you could watch fractally. You're going to catch it here, then you'll see it on the other time, on the longer time frames. And if this is to reverse on the 15-minute, you'll start to see what you're up against to the upside on the longer time frame. So obviously on the 1 hour, when you get to that 117.8 neighborhood, you're going to be bumping your head on the 5 EMA. That's a level that you have to break through, right? What I was hoping for to see to the bullish side on this candle is that price would snap back and test the T line or the 5 EMA. That would show me that it has some bullish guts, but this is not doing that at all right now. And that's the reality. And this is true on anything we look at, any time frame, any asset that we look at. It's all the same. And on the daily, so we had our 4-hour sell signal a while back, and here it is on the daily. It's pretty clear to see where price may or could go, right? One of the things that people get upset about is that, oh, you know, you said price was going here and it didn't, or it did for 5 minutes. Well, that's fine, because when you're a trader, you're trading to targets, right? So when I suggest that oil was going to 61.66, I didn't say it was going to stay there forever, but I said it was going there. Just to give you another example of where people get upset, right? United Health. Why is everybody so upset? Well, they're upset because yours truly suggested that price was headed towards $200. Now, you guys know me. I'm not saying it to be insulting. I'm not saying it to be demeaning. I'm not saying it to be sarcastic. I'm saying it because that's what the friggin' chart says. Simple as that. This solid blue line was here because when price was falling up here, somebody asked me where I thought it was going. That was my number. Did price sit and stay there forever? No, but look, struck once and now it struck again. So obviously it was a real number. Now, if those people don't understand what we're doing here because no one's taken the time to teach them, or maybe I should correct myself, they haven't taken the time to learn, that's not my problem. That's yours. Those are not the kind of problems you want to have when you're trading. We may not hit $200. I don't know. But we hit 268, no problem. From 4 and change. So, does 200 feel all that far away? No. Not to me. Does this chart tell you that it wants to move higher yet? No, it doesn't. It's still in a downtrend. What did it do here? The failed breakout rolled over and took out the previous wave's low like everyone else, like every other one that we show you. And that downtrend continues. Maybe it stalls here. Maybe this is it. I don't know. I just don't believe so yet because the chart is telling me that we're not done. That's all. It's not meant to be insulting. It's not meant to be sarcastic. No one's calling you stupid until you say something when you don't understand what you're talking about. Then you're stupid. Times a million. Oh, by the way, what am I smoking? Obviously your shares. How about that? So, how many calls got burned today on this thing? Tons. Because everybody thinks the bottom's in. Current price revisits past, people. This blue line here had been hit before, and it got hit again. Gap down. Gap up on earnings. Where would I hit? Where would I target? I'd target the POC or the 50. Gap down on earnings, and this thing is a sinking ship, so that would be the logical choice. Where do you gap down to? Where price has been before, peeps. Not too hard. Unless you're in some kind of denial on what's going on here. And obviously some people are. So, learn how to read price on a chart and you won't be so shocked when these giant red candles show up. And then you'll actually know what to do with them. But again, you keep hanging on and you keep doing you. You'll be okay, I'm sure of it. And that's how the ball bounces. Now let's look at our friend Solana, because we have so many people in here that love to trade this thing. Where is it? Weekly Solana. I know last week we were taking a boo at this, and we were saying if price rolls over, it's going to roll back to where? It's going to roll back to the 20. And where are we? Sitting on the 20. Because it's a logical place for price to want to come back to. Look at all the basing across the 20. Price lifts off. This is your first test. Although I'm sure people would argue that it was tested along here several times. But this is your first major test of the 20. Simple stuff. If it doesn't hold up, first attempts typically will bounce or fail. So if we don't hold the 20, what do? We fall down to the next level. Current price will be drawn to past. How difficult will it be to find the past price when we know on the daily that this is a giant ass gap? Probably not as hard as some would like to think. And if it doesn't hold all of this in here, it'll drop down to the point of control, which is where buyers and sellers have come to shake hands in the past. Where do we see where all this stuff starts to happen? Love the 4-hour chart. See all of this back here, all these major moving averages tightening up. You just know that when you come out of them, you're going to get a major move up or down, right? You get a couple false starts and then boom, it takes off. And this has been a real nice run. And the 4-hour chart is giving you a real good example when you're trading above everything, 20, 50, 200, in this case, you're trading above all the major moving averages. You have to anticipate as a reasonable person that at some time you're going to come back and you're going to test these levels. And it's when you test these levels that you need to be paying the most attention, because that's where 9 times out of 10, you're going to see the major shift happen. Right? You get some love from the 20 and 50. You get some more love here on the 20. On this big pullback, you got none. And actually, you got a sell signal long before you broke it. But the point is, when you broke this level, did you find the next? Yes. And as that was happening, did you have total control over the chart? Were you in the driver's seat? Yes, because you knew that you were in a confirmed downtrend on this time frame. You understood that when you broke one level, you would find the next. And you probably had your take profit level set accordingly. Now, here we break the 50, and we find the 100, and we break it, but not all in one wave. Right? So what happened here? Price finds a structural level. So I don't want you just looking for the major moving averages on your chart. They're very relevant and they're very helpful. But I also want you to look for these structural levels. So that's what you're seeing in here, right? Something like this. You want to know where those are. Break the 20, break the 50. We got a bounce off structural support. That's what this is. This bench here was support. You were able to catch a bid from it. And you can see that you're kind of basing nicely. So, you know, it feels like anyways, you're going to take another run. And you take another run at the 50, but you can't hold it. Bounce, 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 bounce. You know, one day you get a big move and then a big retrace, you break it, and then it all starts again, and then you find the 100. You don't necessarily break them in succession real clean, because if you were to do that, that would be a massive, massive sell-off, right? Stocks, assets move in waves, up and down. They inhale and they exhale. There's an ebb and a flow. Notice how price, when it got into this volume gap to the right on Solana, produced these 3 fat red candles. Now, you guys know why now, right? You know why. Because of that volume gap. There's nothing there to hold price up. So boom, they fall quickly. And you're hoping yet again to find some support off this structural level here. If you do not, well then we just repeat and play. We're looking to the next level down. Fail that structural level, we're going to look to the 200, and lo and behold, it actually is some sort of you can connect some tops here, and it's at the bottom of a gap. So it's kind of the anatomy of a breakdown. Just like there's the anatomy of breakouts up, there's the anatomy of the breakdown as well. But it's not super complicated, is it? It's just a matter of understanding levels, understanding what these moving averages are, understanding what these gaps in the volume profile mean and what this light trading means to you as your monitoring price, so that you don't have any reason to front run anything. Way down here on Solana's 4 hour is where we have the point of control. And it happens to be sitting right parallel to 1,000 days of price history on the 4 hour. All of those things will be a draw. And there's only one thing that can change this. That's more money. Money comes in. It's money in, money out. That's what makes price go up and down. Right? And we can pick up a little bit when it's moving up or down. Here's our stochastic RSI. Right? When the intention is not to trade every cross with the thing, because it can stay elevated or depressed for a very long period of time. But there are clear indications, in this case, when the buyers are leaving the building. And that's when you have an area up well above into the 90s, above 80, and you're overbought, and then you see it just roll over. These two lines, %K and %D, they just roll over like this. And that helps you realize that, hey, the buyers are leaving the building. When we look at our Fisher transform, same thing. Right? It doesn't get very choppy at all. It's one of the cleanest indicators you can use. And if you can appreciate that it's filtering out noise, because remember, fibs, fractals, and filters, we're filtering out noise. This creates a Gaussian channel that does just that. And it's just confirming for us that, hey, this is downward price momentum. And then when we look at our MACD finally, the 0 level is right here. Histogram's green for up, histogram's red for down. But your moving average and signal line just rolls over right as you start to fade on your MACD. And the point is that all of these little things together, hey, here's an example of lower tops. So what if it's a MACD? It's just an example of money leaving. And you can tell a lot by these other indicators as well, right? This looks like it wants to continue a little bit. And we just keep switching time frames to see what we're up against. If we wanted to look ahead, we'd look to the 12 hour, which is actually a beautiful chart for what we're trying to do here. There's the upper value range that basically our line's sitting on. Nice big gap on the 12 hour, followed by right at the point of control. And all of this past price through here is what current price will look for in the event of a downtrend or exhaustion, whatever we want to call it. And it's just a process. So the 20 and the 50 here and the 500 day on the 12 hour, that should be reasonable support for price, right? It should be. It's also along this kind of shelf here. So you would really hope that you do get support and a bounce to kick you higher. If you start to chatter and you slowly look like you're breaking down on the shorter time frames, what are you learning? You're learning that maybe you're going to fade this into the gap, right? You would have to have, break support from other major levels as well. But there's enough of them in here to make it look like it wants to fade a bit more. And if you guys have any other symbols that you want to look at today, let me know and we'll do that. I think XRP is another one that we should take a boo at. So here we are on XRP, where we had a little bit of love from the 20 for a while. We're now failing it right at the upper value range, which is just at the top of that gap to your right. With the 50 sitting, when that's the ice blue color, the 50 sitting down around the point of control at the bottom of that gap. And the 200's just beneath it. So what does that tell us? It tells us there's some attraction for current price. That's what it tells us. And you guys know that these gaps can be your best friends. They are your absolute best friends on any time frame. You want to be able to trade in and out of those gaps. This is not a pretty 15-minute chart, is it? There's going to go to the 1 hour. So here's a nice chart. 500-day moving average on the 1 hour below, 100-day moving average, which is red, to the upside. So you broke it back here. This was your first attempt to break out. And what is the rule? There's a higher probability that first attempts fail. And here you go. Fail that level, find the next. Found the 20, right? Couldn't break the 200, pulled back and played around here for 3 or so hours at the 20, couldn't hold it, broke the 50 and wicked the 100-day moving average. Look at this. Wick, 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 wick. You cannot take the T line. Right? This is all bearish, 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 bearish. And so many traders, and you know, listen, you might be one of them, or you have a friend that does this all the time. You know, there'll be a series of red candles, and as soon as they start to see the green ones, they're all over it, right? You show them more than one red candle, and they start, and they can't help themselves, right? Just because you see a green candle in a downtrend does not mean that it's a reversal. There's a lot going on here on this chart, but the way that we do it simplifies it. This is a first attempt. They likely fail. So we're somewhat prepared for that. Our 5 EMA senses the fade right away on this candle and hits red, right? So you could hit the sell signal or the short signal right here and feel real good about it. Price fades. Here now you have price trading on the south side of the T line and the 5 EMA. When you're trading on the south side of those levels, downward momentum is what you can expect. Even on the green candles. This green candle here, is that a first attempt at the 20? Yeah, first attempts typically fail, yes. Did this divergence telling you that you're in a down 10 break? No. And there you go. One level, one level. And here we are now. This is why reversals, if you look at this chart, they don't happen in one candle or one day or one wave. It's always a series. And so here's your breakdown. This is why I like levels, right? Why do I like levels? You're looking at it. I need to know what the range is for price so I know how to handle it once it's inside. Okay, there's my top. There's my bottom. This is what I'm thinking instinctively anyways. Here's my upper value range. Here's my point of control. There's my lower value range. Everything above the point of control is gappy. Everything below the point of control is gappy. Bounce, test, fail. Another failure. Fail like this. So this second failure is the one that kicks it in the ass and it breaks the 500 MA. It's trying to find, as a level, this is support. That's all it is. Excuse me. And it's starting to form a wedge, right? So you want to monitor that as a trader because you want the breakout or the breakdown. Right? And there's traders and investors. The investors don't want to hear anything about the breakdowns. I get it. But if you are an investor, what you want to make sure you understand is, when am I looking at a top? What is a potential bottom? Like, if you don't know how to read a chart, and all you do is spend all your time on TikTok and X, then you're going to have no problem buying up here. You won't think anything of it. Probably won't even look at the chart. Perhaps all you'll see is green candles, and in the back of your mind, there's that video that you saw of someone telling you that XRP was going to be $10,000. Maybe it is, but not today. And you might not be in a position to hang around and wait for it to be $10,000. Charts don't lie. It's a real-time representation of what money is doing, not what people are saying. No one will look after you better than you. Period. There's a lot of people who are going to tell you to buy and sell a lot of stuff. And the older you get, the more you're going to hear about all the wonderful things that are available to buy. You have to do your own research, your own due diligence on what you want to invest or trade in. But make sure it's you who's doing it, and not the world of group speak, where everyone is saying the same damn thing over and over, and then sooner or later, you believe it too. All these people can't be wrong. Yeah, they can, because they ignore reality. Right? Charts don't lie. Why do we trade? Right? Why are you here trying to learn? Probably because you want to earn maybe some extra money. Maybe you're looking for an entirely new profession. I don't know. But everyone's got a reason. Whatever your reason is, it's serious enough that you come in here every week and you watch these videos and you go on YouTube and you watch them again and you reach out to me and we talk, and I love it because you're serious about learning things. And there's so many great people that are in this sphere, right, that you can learn from. And unfortunately, a lot of times, we're too stubborn to realize that, we're all a little bit right and we're all a little bit wrong. And I'm saying that sometimes I'm going to be wrong, right? But this isn't about being right all the time. What it is about teaching a methodology and helping you understand how to read price on a chart, because it's a language. If you believe mathematics is a language, this is a derivative of mathematics and thus a language of its own. Right? And the way price behaves repeats on every asset, on any time frame, in any market. XRP 4-hour. You're having a nice bull run. There's no denying what that is coming out of all of that consolidation. You can't deny it. And you have this nice run up. And what do? Hey, you test the 20. And you get a continuation. And you start to test it again. And eventually you roll over. Nothing goes straight up. Nothing goes straight down. You're going to have to deal with a little bit of chop from time to time. But just do what the chart tells you to do. That's why we're doing this. So you don't have to think as much. Or at least I don't have to think as much. That's why I created this stuff. There's our sell candle. Now, people that are holders, they don't want to ever see those and they don't want to ever deal with them. And a lot of them don't. They just hold forever, and that's okay. But if you're trading and you see that red candle and that sell signal that follows another, a buy signal that tells you that you're consolidated and tight, so you're twisting and switching, throwing signals around. But you're trading above the 20, the 50. Well, you're trading above everything. And a reasonable person knows that at some point in time, you're going to want to come back and start to test levels. So you break the 20. That sell signal came when you broke the 20. That should be clear enough, because again, I'm going to fast forward to the right. That's what you're looking at. right? You know this is the upper range, you know that's the POC, and you know that's the lower range. Okay, so you broke the 20 and you got a sell signal. What do? Pretty easy, you short the candle, right? That's your short signal. Find them the next level. Maybe you want to take a little bit off there, but because you know that how price moves, you break one level, you find the next, you probably already have an order there. Still in a downtrend, look at the chart. Still have all that divergence. Made the next level. Is all that divergence still there? Does the chart still look like it's in a downtrend? Yeah. This is where all your friends got faked out. And they went long. Only to wake up in the morning and price, the failed breakout, came back and took out the previous wave's low. And it's the same person all the time that's telling you the same thing. I don't know what it is. Every time I buy, price goes down, or every time I short, price goes up. And that's just simply because there's no understanding of how to read price on a chart. And as all we're doing is following. Right? So now you have a sell signal. You take it. You don't have a choice, right? You can just sit there and watch it. So you take it. Doji at the top of a trend higher with the first touch of the 50 major moving average. What do? Chances are you're going to have to exit that trade or have your, the balance of your take profit there. Because those first attempts typically fail. We know this stuff. We watch it every week on every asset and every time frame. But we have this unique ability as human beings to talk ourselves in circles about what we see. We really do. And, sometimes we get in spaces or we go on other online forums and we talk about all this stuff repeatedly. And sometimes by the time you're done, you don't even know what you talked about. All I know is that the chart usually is pretty clear. Rejection, everything goes red, I don't know, maybe sell. Bing, 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 level, level, level. Not that hard. We just have no clue what comes after the current candle we're dealing with. But that's the job, right? The job is just to go from level to level to level. Nobody wants to hear bad news, right? Nobody does. I get it. This is bad news. Chart's still telling you it's bad news. Why do people hang on through all of this stuff? I don't know. I don't get it. I'm not wired that way. That's just a terrible, terrible, terrible looking chart. And there's no denying that it isn't. And at no time in 2025 anyways, have there been a lot of reason to want to buy this thing. And the reasons why, I don't care. I don't care. And neither should you. Because if you spend time caring about why price goes up or down, you're wasting it. The market doesn't care that you're thinking about it, puzzled beyond belief, and perplexed, crippled by analysis paralysis because you're trying to figure out why the market's doing what it's doing. That is not the job. The job is simply to follow the chart. Real-time representation of what money is doing and not what people are saying. Lost in a lot of, or let's just say have other things sucking the air out of the room, between Bitcoin and ETH and all this new stuff that's going on, which is all fascinating. There's something like B&B that's just been plugging away, doing its thing, right? And what's the chart telling us? The chart tells us that it loves the 500-day moving average, gets a lot of support through there. And eventually, when the time comes to pull back, we know exactly the levels that it can tag. Right? Let's just go back to the daily. So we know we're trading above the 20, above the 50. We're trading above everything here. And we're trading at a premium. So are we happy that B&B went up in price? Sure, if we have some. Right? We're very happy about it. But we can't be surprised when price pulls back to an appropriate level, which would be the 20-day moving average. Right? It really hasn't had a test or a continuation of the 20 yet. So that's yet to happen, right? And even if price, so what's going to happen? Price and time will find a way to come together and meet. And that meeting will either be a continuation or ultimately a failure, one of the two. We know if it fails, and we're into price exploration territory here, but if it fails, it's pretty clear. Here's the 20, here's the upper value range, a logical place to tag. Fail that level, well, there's the gap, there's the 50, there's the 200, and you can write that story. Right? When we talk about price moving up and down, we're not talking about it in the context of, do we approve of the coin that we're looking at or the asset that we're looking at? It has nothing to do with it. We're just evaluating what we see. This chart, you got a nice clean buy signal. Of course, that impulse down that we always talk about, and then the reversal candle. Played a little bit of resistance along the 50-day. And then boom, you break out. Little skis here right off the 20 actually, and boom, there you go. Those are great moves, but they don't last forever, and they do get retraced. Those are the places where you can expect them to go. And how do we take a look to see what's coming in advance? Just shorten your time frame up. Right? There's the 4 hour, and it couldn't be more clear on what those levels could be on the way down. Right? Had a beautiful move higher. You had your continuation on the 20, you fail the 20, but you get it off the 50, another off the 20, another off the 50. As long as you see that, you can feel good about it. I don't like it when you fail the 50, you guys know that, but when you get continuations off of it and the 20, that's great. Now you're starting to see a different story unfold. Right? We didn't get anything, we didn't get any love at the 20 on the 4 hour this time. And this current candle has not yet, although there's lots of time on it, hasn't fully snapped back. So what's it want to do? Right now it feels like it's in purgatory when you look at it on this time frame. Right? There's the 50 and the point of control. Well, we know it's going to be drawn to that. And then up here, we have the 20 again, and of course the T-line and 5 EMA that we have to test to change direction. So this is kind of a right in the middle of nowhere. So we have to wait to see how this plays out. But if you rise up and you try and challenge the T-line and you fail, you're going to roll over, take out the previous wave's low, and then that's how you'll get to the 50. We break through it, then what are you going to do? You're going to look for the previous wave's high. And if you were to do that, you can see that this is pretty light trading up here, so it's easy for price to move higher when there's light trading. Level by level by level. Nobody wants to look at this chart today and then come back in 4 to 6 weeks or a few weeks and see price has done this. That doesn't seem plausible at the time. Doesn't seem plausible up here, right? But it's the anatomy of a breakdown. We could simply get support at the 50, price bounces, then you're looking to take out this level and then the next. It's simply a process. And when you're indifferent to price, which means you don't care if price goes up or down, you'll find that it's easier to make decisions. You'll be less tormented when you're indifferent to price. Okay. Any questions at all so far? Or any symbols that we want to look at? Rico, Mickey?
Yeah, I'm currently just while listening to you eyeing CFX. That's the one we talked about a little bit.
CFX,
So
that's right too.
yeah, that's one that I think I've been looking at. It's been doing really good. It's been almost pretty smooth. You can catch it pretty easy, especially if you're doing like multi-time frame analysis. Like I'm doing some scalps. I don't suggest everybody does it, but I'm using the 15 and the 5, and just kind of finding my finding where I get into fit in, and doing some nice scalps on it.
Well, this is actually a really good chart to watch this on. So, everybody can see here the rainbow that we created when price went parabolic. And that's what happens. It fans out all of your averages or your levels, and the shortest ones are the first ones to take off, right? Which makes sense because they're shorter time frames. So here's your top. Here's your top. I think you were mentioning it. It kind of topped out at the upper value range, which it sure did, and then you get a sell signal. Now it could have been looking at this one, and it would have gone nowhere, and you're like, I got stopped out. You take the long, doesn't last very long, and you start to get discouraged, right? You don't know what comes after the current candle. All you know is that candle gave you a sell signal, and you have two choices. You either watch it or you trade it. And if you traded it, sell signal creates the divergence between those two levels that we talk about, which is just a visual representation of momentum and velocity of selling. That's what spreads those levels out. Right, here are the two candles again that fake out all your friends. Oh, two green candles, I'm going long. Oh, that's it. Right, take out the previous wave's low. Notice that you can't break the T line and the 5 EMA. And where are great places to re-enter your shorts? Let's say you were short and you got stopped out, when price gets back to the 5 or the T line like this, those are your areas to re-enter. Like here too. This one particularly interesting because you're up against the 200 MA, right? Big move down, can't break it, fail. Still, like all this divergence is telling you, you're still in a downtrend. Even, again, your friends got faked out again here, right? You can even hear them. Oh, damn it. I tried to re-enter a few minutes later and it happened again. Well, why? Well, it's because you were still in a downtrend, you ding-a-ling. That's why. And even here, you're still in a downtrend, right? Like you don't have the momentum of that short-term 5 EMA boosting up through the T line to break the trend. It's the market's way of telling you, don't go long yet. It just doesn't say it in English or whatever language you speak. Right?
I speak money. No, I'm joking.
I'm bilingual. I speak English and chart, right? Like
yeah, that's what's up. I like that.
That's about it. Anything else, I'm completely lost. But the chart is telling us what it's doing.
Now I feel special because I'm trilingual. Because I'm going to add that one to my thing. But
yeah, and
yeah, for sure, man.
Like
I think what you're saying about like just getting faked out, like trying to catch. I no longer really catch the falling knife, and even earlier, like something that you said about like when it's done, just get out. Like the longer you hold it, the more pain you're going to be in. Like you'll see a setup like this. Like me personally, obviously, I was telling Blunt before we started the live stream, I was mad because I knew it was going to come down, but I was so tired yesterday it's been a lot going on, and then I was in the pool for like 2 hours, so I passed out. I knew there was this short coming up, and I missed it. But when you got this stuff kind of down packed, you won't even chase this short. No, you could just wait for a really good time, watch the chart, find your setup, so you don't get caught up in. I call it getting caught up in the middle of the street sometimes, and it's like you gotta
Yeah.
now you're playing Frogger, right? Or I'd rather just go from one side to the other. It's like right now, it's like I have no mind if the price wants to keep going down, then fine. I don't want to chase the short because I already missed where I would like to get in, and
Yeah.
that's like the break of the 50.
Yeah.
So I'll wait for price to start hitting the 50 moving average again, and I see the point of control up there. I see we're really underneath the lower value range, and it can only go down for so long. Where potentially I'll catch a nice little long coming up later on today and stuff once it starts bouncing or crashing against the 50 moving average, buy signal, T line broken, all that good stuff.
Yeah. And this 5 minute chart is a real good example of a chart that you're tempted to cheat, right? Because you can see that the 5 EMA is projecting higher, right? And you're like, yeah, okay, break the 20 and I'm going to get a head start, right? This is the front run. This is where front running comes in. And as all of a sudden you're starting to think about what your take profit levels are going to be, but you're unaware that the chart is still in a confirmed downtrend, right? That's the part that gets us. It's like this would get us. This stuff gets us, right? So that's why the waiting, as hard as it is the right thing to do. Just wait for the confirmation and do what you're told. Understand that you have no idea what comes after the current candle that you're in, but you manage and mitigate your risk properly so you have stops set in place. And from
Your
time
mic just dropped, by the way.
Oh, it did?
Your volume just went super low.
Is that better?
No, it wasn't the same as before. Maybe somebody else let me know if it's me, but it's dropped significantly where it's really low.
Can anyone else hear that, or is it?
There you go. You're back.
Yeah. Okay, that's
You're back.
Weird.
Yep.
Yeah. So it's just let the chart tell you. Like this is a real good example because it's a short time frame and it's we're watching it live. When the signal comes, if it's confirmed, we'll see it here, right? And we'll deal with it based on what we see on the chart. My concern is you don't want to get too overbought here and have it hit the 20 and then roll over, right? But we just wait for the market to tell us what it wants to do. Now, a little bit of, this could be first mouse territory, right? The first mouse gets the squeeze, the second mouse gets the cheese, right? So again, beware of the failed breakout. But this is a clear, clean chart of where price might want to go. It's going to want to find the 200. It's going to want to find the 50 when it breaks. So now everyone is switching their screens to CFX and they're going to start trading CFX. So
it's been really nice to trade this one, because it's only like 21 cents. I've been trading it actually since like 15 cents, and I did really good on it. And then since I did so good on it, and I was printing a lot faster than on Solana, I switched up so quick, and it has so much volume that your trades go through right away. Like you set your limit, you set your orders or whatever right at when you want it, and those orders are getting filled right away. And I like that because sometimes I just want my order to be filled. So
that's awesome.
Yeah, it's been moving good. I got one more for you. It's for my friend. He kind of caught the falling knife. I told him to wait a little bit longer, but it's on Soundhound.
Okay, what's the symbol for that?
It's SOUN. It's an actual index and stuff.
Stock. Alrighty.
He's already made life-changing money on QBTS, but this is what he's trading daily, basically, to try to print with me like day trade. But he's more of a swing trader. He's holding QTBS or D-Weight or whatever, and he's knocked it out the park. He made life-changing money, but this one right here, he got in at 12, and it just kept falling on him.
I'm trying to turn Happy Meal money into life-changing money.
There you go. Hey, Happy Meals aren't cheap anymore, so it's a pretty good head start. So
he put a lot of money, Mikey. He put like on QPTS, it was like got in like at $6.50 or something. It's at almost, it fluctuates over 20, but he put in a lot of racks. I mean, where he even admits, he was like, I think I got a little bit lucky because, you know, it's really close to $1 million bag already. So
Hmm.
yeah, so it
Oh,
wasn't McDonald's money. I wish, because I'd be sprinkling McDonald's money all over it, especially my my round self. I almost said something else, but I'm getting rounder by the day, Blunt.
So this thing is kind of channeling nicely. Um, I think your concern right here is that you have to hold the 50 and the 200 here. Um, if it doesn't, then you're susceptible to, you know, $9, and $9.84 is where the 100 is, but it could sink a little bit lower than that. Again, that's assuming you don't hold this level. And again, a great example, here's a volume gap, right? Like, I'm sure from this point forward, I'm sure your friend has a volume gap on the chart, because here's what happened. He bought at the top of that gap, right? Not realizing that he was kind of falling into it. And, here you are. Probably a
He
two.
sure does know about it, because I mean, I'll
Yeah.
tell you that.
Yeah. So, like,
Yep.
and again, that's an example. That's actually a good one, though, Rico. Thank you, because it's an example of someone who's probably more of an investor, and, was buying what they thought was a decent stock. They just bought it at the wrong place. And, you know, seeing this and understanding, that's resistance in this big gap here, that if you fail that level, whoosh, it's a quick trip down.
For sure.
Yeah.
For sure. Yeah, he's more of an investor. I've been luring him in. I told him about getting the indicator. I was talking to him about your new one that has everything connected to it, so you don't have to pay a
Yeah.
lot for trading view. So I'm pretty sure he's going to be coming around the corner soon. He's out of town right now, but he's one of my good buddies. That we go to a hookah spot and bust out our laptops and talk money all day and stuff. We
That's
rent
the
a
life,
room
eh?
and just sit there. Yeah, yeah, it's nice. It's I think it's healthy when you find somebody like that, and you guys can go to a spot, rent out a private room, and just chill and really talk about the stuff that you want to, but still in a fun setting. It's like
Yeah.
we're still nerding out on a Friday night.
Yeah. Yeah. Which is, th- there are worse hobbies or habits to have, right?
Absolutely.
de- definitely.
Uber Eats is one of them.
Oh, yeah.
Uber Eats, he says. That's good. That's good.
This is
Yeah,
Pepe.
hookah and money isn't a bad hobby, man.
Yeah. So, you remember when they wanted to make Pepe a stable coin, right? Like all kinds of nonsense like that. But, this is an example of a breakdown, right? This is one level, you find the next, you fail, come back down, you fail again. The level that you got support from on the next failure, you break. Like, it's just one after the other after the other. Like a real good example of just breaking level by level by level. The only thing that changes the momentum is just more money coming in. That's really all that can do it. We talked about Apple several times. Here we are. This was Thursday, and we talked about Apple. If it rolls over here, which it is, it would find the 20, which it did. Trading above a lot of major moving averages, you're going to come back and check something. What did we also talk about? We also talked about this gap. That if Apple falls into the gap on the daily, it's going to look for the 50, and then you got the 500 down here, and then the point of control that's averaging all of the past activity. On that weekly chart, blow that up for a second. There's your little doji at the top of a big bull run. Now we start to fade. You break down, you come back to the 20, you fail. That's when we drew our second top. First lower high. Here we go. Now where are we today? I don't like this chart. If this is a rollover and we come back and we take out the previous wave's low, where's that put us? That puts us
Looks
in
like it can come.
170,
Yeah.
169. Like that puts us in a scary territory. And this isn't about, being negative or anything like that. It's about understanding the downside risk on the chart. Because if you understand the downside risk and how you can get there, you'll probably become a better trader long. So if you can, I used to only see the opportunity on the chart. And it wasn't until, my trading evolved more and that I became more aware of the downside risk first that I started making better long trades. And it also opened my world to the downside monetization of the market, which was something I didn't focus on as much. But it's true that when people tell you that you can make money in bull markets and bear markets, right? That's possible because you're indifferent to price. You could care less on any day of the week which way price was going, because your job is to monetize its direction regardless of where it goes. That's it.
Yeah, I was actually practicing some trading the other day, some longing and shorting on XRP. I think it was like Friday or Saturday. I may have done it, but yeah, definitely. If you're able to spot when it's going to go down, it'll definitely help you get those long trades, because you'll be able to see the reversal on the trends and things like that a lot easier.
Yeah.
On an upward momentum after experiencing the down, definitely. Because I had got in with like a long, I think it was like 321. I think I longed it to like 323, and then I shorted from like 326 down to like 321.
Nice. This is the this Bitcoin chart. So here we have the 15 in the middle, the hourly, and then the 4 hour. And, we talk about what goes on one time frame appears on another. So on your shorter time frame, the 15 minute, you can see you've got that attempted breakout that we talked about at the beginning of the stream. Well, now it's kind of hooking up, and you can see this is the lower value range down here. You're starting to produce this red candle. Now, obviously, a candle hasn't closed, so we're still in play. What are you hitting your head on the hourly? The 5 EMA. So what you're seeing here on your 15 minute is the 5 EMA on the 1 hour. You know that you need to break that on the 1 hour to start to get some traction. You also know that the T line is this level here. So the resistance that you're seeing at this level is simply the 5 EMA. Why is that important? Because, well, you don't want to have a failed breakout on this time frame that's going to roll over and take out this previous wave's low. You want it to break through and push through and start to reverse the trend. But this allows you to see on various time frames what exactly you're up against. Right? And things like the T line or the 5 EMA, when you're trying to, change trend, are actually really important. So this level is the 5, and this level, which is the 500, is essentially the T line on the 1 hour. So on your 15 minute, if you can break this level in here to the upside, that you're actually breaking the T line and hopefully setting up to break the trend and move higher. And it's really helpful when you can see what exactly you're up against on another time frame. If price was falling, we'd want to see what it would be falling onto. Now, you can do this on your trading view charts too. You know, create different views, which sometimes I use, sometimes I don't. But today I just wanted to show you how to kind of look inside the breakouts and the breakdowns. Use these different time frames in one view so that you can see what exactly you're up against. Major moving averages, T lines, you know, a structural level. It'll all be there. But that's simply fractal analysis. That's why we do it. Okay. This is a little bit of an unsteady market. Let's look at oil because it's actually popped a little bit. I just got to take off the volume profile because it doesn't like it. And for all intents and purposes, let's take off this stuff too. Oops. All right. So daily of WTI or what do we need to do here? We have to start to trade. What are we looking for currently? We're looking to take out this previous wave's high, right? Failed breakout, rolled over, found the low. Now we're moving higher. Nice double bottom-ish kind of setup, which is interesting because if you look to the left, it's connecting from these tops as well. It's going to look for this previous wave's high, and if it breaks that, certainly like to see it push past this the trend line and then take out those highs there. In other words, it has to trade well above, let's say, I don't know, $78, $80. It has to trade above that level in a meaningful way. And when I say a meaningful way, I mean in a way that it can prove that it has changed direction. These are what I'm watching to see if that happens. And this could be anything. Right? This is the monthly chart for oil. And what we see on this chart here is the 500-day moving average, which represents 41 years of price history. 41 years. So as price was getting support and then ultimately a failure, it was at 41 years of price history. What do we have to do? Here's the monthly. The monthly makes it look a little more challenging, right? You've really got to break above this kind of $80 level in here. Fail this level and it could be, you know, we could be just doing one of these again. Break it, other story. But it has caught a bid. There's the level that we picked up on the weekly, which is 61.66 right here. Right. And on the weekly chart, there's the 1,000. This is some about 20 years. This will be close to 40 on the weekly. And you can see how relevant it is, right? Support, support, support. That's why I kept telling people, if you break this, you have a problem, right? We literally have a problem. Caught a bit of late, but we're not out of the woods by any stretch of the imagination. I still fail to see the economic case for oil to move significantly higher yet, right? At least for now. In this game, finish every sentence with for now. Prices are higher for now. Prices are lower for now. We're in a period of consolidation for now. Because it all changes quickly. It all changes quickly. Our job is just to follow. It is not to. That's all we have to do. And I don't mean to try and oversimplify it. But again, that's all we are doing. This is a chart of XLM. I'm showing you that, stellar lumens, because it's another one of the ISO compliant coins.
That's right.
Right. So let's just add a little bit of context to this chart. Add in a volume profile so that we can see where the money has and has not been. because that's going to help in our analysis, right? So, okay. This level through here is obviously very important. So what is that? 51 cents? That seems to be some sort of a barrier, which is our upper value range on the volume profile. But when you wick it, like you were doing here, and you start to pull back, remember how we like to say when you get too far away from the 5 EMA and the T line, price will pull back to it? That's exactly what it does, right? Then you get the signal to break down. A little bit of love from the 20, which you would expect, and then here you fail it. You notice how many things have failed the 20 today that we've looked at? Quite a few. So that's telling us that maybe we're in for a little bit of a retrace. I didn't say depression or recession, I just said retrace. Where would XLM want to pull back to? What does the chart tell us? There's a whole lot of air from about 34 cents to 42 cents. Right? That's the trick. Staying out of the gap. If you can find your way into the gap and you're short, it's a home run. But that's what we're looking at. And on a weekly, where do you want to pull back to? The 20. Right? If you don't find support from the T line and the 5 EMA, you'll come back to the 20. Make sense?
Yes, sir.
Okay. Good stuff. Any more questions? I got a hard stop today because I have another meeting to get to. But if there aren't any other questions, we can end this one, pick it up on Thursday, and see if the fade actually fell into the gap, or did money come in and change our life? So,
I don't know if you covered this earlier, but B and B. If you did cover, I'll just run it back and
we did.
watch
We did.
it.
Yeah, we did.
Okay, cool.
All right. Listen, I do got to run because I got another call to get onto, but let's pick this up on Thursday, and we'll see how we did. And if there's any other questions, just reach out. We're always here to help you out.
Yes, sir.
All right,
We
guys.
appreciate your time, Blunt House.
You bet, guys. I'll see you later. Have a good day. Take care, everybody.
You too.
Bye-bye.